you got Daniel Cormier, you got Conor McGregor.
Train Alta, MMA 5-time world champion with my endorsement.
Nick Langton, welcome to a Going Public, mate.
Thank you, Mark. It's great to be here.
Your business, Train Alta, which you and others founded. Tell me what your tech does and where the idea came from.
Now they say 640 million fans of MMA, but there's no easy consumer on-ramp. And my epiphany was, okay, how could we convert those fans to participants? And how could we leverage globally this wonderful inventory of coaches and gyms that already exist and funnel those customers into them to train and learn and do programs? Somebody said that raising capital is just creating obligations. But on the really tough days, I could look at the people who'd invested in me and pushed forward.
You've got to keep fighting every step of the way.
Yep.
You don't stop. And what is your ticker?
It's the best ticker.
What is it?
MMA.
MMA. How the hell did you get MMA?
Well, that's...
Hey guys, just before we start this podcast, I have to make a disclaimer. I, through one of my family companies, is an investor in the Train Alta entity that is listed on the NYSE. So I am an investor, but it's not going to change the way I approach this. Nick Langton, welcome to a Going Public, mate.
Thank you, Mark. It's great to be here.
And mate, it's fantastic here because I sort of remember back in the mentor days, I don't know how many years ago it is now, pre-COVID, that's for sure. Mm-hmm. Your business, which you and others founded, was called Wimp to Warrior, W2W.
Yeah, long time ago.
Yeah, changed the name appropriately, I think, to Train Alta, ALTA. You were, well, mate, you go back and tell me where the idea came from.
Yeah, so...
how many years ago too?
This is going back a fair way. So... I got back involved training martial arts in my late 30s. I'd done it as a kid, came back to it. There was actually a program that was, founded called Wimp to Warrior. And the whole idea was it was actually created originally as a potential reality TV platform. The idea that you take 40 men and women who've never trained before, train them for 6 months and let them compete in amateur MMA, and which is kind of a really bold and exciting and unique concept. But what I found going through the program, and I was working at Perpetual. I was, running a division of Perpetual at the time, and so had a kind of a young family and a white collar job. But I got back into the gym in the mornings and trained really hard, obviously, as you have to in preparation for competing and for fighting. But what I found was how much I enjoyed being back in the gym, not just for the work you were doing, what I was learning about the sport, reconnecting with it, having done a lot of judo as a kid and kind of rediscovering how much fun I had. Role modeling for my 3 sons who, this is going back sort of over 10 years ago, and they just started their jiu-jitsu journey. So from my perspective, what it showed me was actually training in combat sports and martial arts. I found it a lot stickier in terms of how much I wanted to do it. And I think we often talk about the fact that fitness is fad-based, but sport is evergreen. If it's a practice or a pastime, it's not like you churn through, we all know there's all sorts of different fitness brands that come and go, and maybe they're on short cycles or long cycles, but ultimately they come and go. But sport is far more enduring. And I thought to myself, like, the product inside a martial arts gym, the care of the coaches, technical instruction, the community of people you train with, it's a remarkable product, but maybe the wrapping paper isn't that great in terms of how it's presented to the market. And that was kind of an epiphany for me. And so I invested in the original concept of the business, which, at the time was programs and potentially a non-scripted TV series. But what it kind of morphed into, and when I decided to leave my corporate life at the end of 2016, was I'm like, okay, this actually has legs in terms of martial arts is growing massively in popularity. The growth of the UFC has been absolutely stunning. There's huge interest in how to get started, but there's no easy consumer on-ramp in terms of how would I do that. And my epiphany was, okay, if now they say 640 million fans of MMA, how could we convert those fans to participants, and how could we leverage globally this wonderful inventory of coaches and gyms that already exist and funnel those customers into them to train and learn and do programs. And so that was the genesis of it back at the end of 2016, early 2017 when I came out to do this full time. I'd kind of invested in the concept back in 2013, but when I decided, hang on, I'm going to take a big bet here and leave my corporate life, that was on the belief that there was a huge opportunity in this sports vertical around the transition from fandom to participation. And that's when it started. And I think maybe 5 months after I started that journey, I came in and had my first chat to you on the Mentor podcast in 2017.
Was it 2017?
It was. That was the first time we
Wow.
caught up.
So at that time, who were your founding partners, shareholders, etc., and sort of what was the structure we're talking about?
Yeah, so we had there was originally me and another founder who was the guy who created the program. Really passionate, talented martial arts coach, but a guy who really was focused on the coaching element and enjoyed the transformation it could provide to people in their lives. I suppose I came in with a view, number one, the consumer lens going, this has really wide applications, but how could we scale this? How could this be something valuable? And then I think our big break was at the end of 2016, early 2017, John Kavanagh, who's Conor McGregor's coach for, a lot of years now. John had run this program in his gym in Ireland, and it had been really successful in terms of getting a very different type of member into his gym. Typical, middle-class families who now who found a pathway to train, as opposed to the next Conor McGregor wannabes who don't really want to pay their fees and whatever. And so John came on board as a co-founder, gave the business obviously enormous credibility from a standpoint of his profile, but importantly he started talking about what it did for him as a small business owner. And I think a lot of people assume just because he coaches Conor that he's got it made in the shade. Well, he's still got a business to run. He's still got 500-600 members of a gym in Dublin. Yeah, he's got a big pro fight team as well, but the pro fight team doesn't pay the bills. So it was really John, getting out there and starting to tell the world with his platform, about what we did. And then that was an opportunity to really look at fast tracking the business to say, okay, so now we've got this notoriety. Now people have heard about us. What we're really focused on is the next phase of growth. You've got to do that through technology. So how do we scale this from IP and a brand and a payments platform, which is where we were at the start? How do you scale that into sort of more enduring technology and an investment thesis that will get institutional investors to come on board? So in the early stages, I was raising money from my network, obviously having 20 plus years in investments and financial services. I had a really good network. And
I should disclose that I was one of those early investors.
Yes, you were.
So I should disclose, let's call it conflict if there is such a thing in this discussion, but I was one of the early investors. But
yes.
So you raised some money. Is it like first round? I don't know what they call it these days. Everyone's got a different terminology, but that was your sort of first round.
Yep.
But you need to raise money. You need capital
Yep.
to take it to the next strategic level.
Yep,
and
correct.
Because ultimately you identified good brand, good concept, good thesis, rising tide, people around the world love MMA. UFC was a big part of that. But purpose, you go train with a purpose.
Yep, correct.
There's an outcome. But I think the really important thing that I like that you identified is this has got to be a technology play.
Yeah. Yeah, I mean, that's
sport tech. I don't know what you want to call it. Is there a word for it?
Well, I would see, we kind of traverse a number of different elements there. That there's IP branding, there's marketing and promotion, so there's content publishing in that regard. Our payments architecture is at the core of it. Part of our value proposition to gym owners was we'll bring you new customers and we'll also take care of.
Well,
the
could you
entire
explain that?
experience.
I think it's really important, Nick.
Sure.
So let's pick an example. What Train Alta does today.
Yep.
I mean, it does a lot of things, but at that level, at the gym owner level,
yes,
identify a gym owner, let's profile him or her a little bit, and then tell me what your tech does and what Train Alta does for that gym owner and for the consumer who subscribes to it.
Yep, of course. So from a gym owner's perspective, they've got the opportunity to sign a license with us so they can run an Alta program. Our value proposition to them is to say, look, we're not going to charge you a cent for the license up front. You sign the T's and C's, you get access to the syllabus and the training. You're going to help us co-promote your series, but we're going to market to get a program on the mats in your gym.
Tell us about the syllabus first, because then that's your IP. That's sort of what you transfer to them for that license. Yeah. So what's your syllabus?
So the syllabus, obviously I'm the business guy and I'm the guy who's trained, so I'm not a coach. But if I talk about the nature of the syllabus and what I think the business has done really well over a lot of years is it's created a syllabus that makes the entry point to training in combat sports and mixed martial arts as gentle and easy as possible. Now, that kind of sounds paradoxical, right? Because you're going into a fight gym and learning to train. But I think the genius in the program in terms of how it was originally created and then the subsequent refinements have been that the syllabus is put together. Like none of the coaches, there's nothing in it they haven't taught 100 times, right? Whether they're teaching an armbar from mount, whether they're teaching footwork when you're striking, whether they're teaching takedown off the cage or whatever they've taught that stuff a million times. What you find, particularly with beginners and first timers, is it's all about the sequencing of the training so people don't feel overwhelmed on a learning basis. Because the hardest thing learning something new, it's kind of like if you went in and took a guitar lesson and in the first lesson, your guitar teacher was trying to teach you to play the guitar like Eric Clapton, I think you'd feel pretty deflated. Overwhelmed, deflated. I'm not going to get this. This ain't for me.
And you drop out.
Yeah, correct. That's attrition. And I think sometimes certainly in this sector, and I think it's probably potentially most, but sometimes coaches feel that the utility for the customer comes from how much, like what's the value exchange, i.e. how much, if I give you more, the more I give you, the more value I'm providing. Whereas the consumer might be feeling overwhelmed and I'm not getting it, I'm a bit embarrassed to ask. So I think the genius in the syllabus that we've built, and we've put close to 10,000 people into their first amateur MMA fight in the last sort of 7 odd years, right? Nobody in the world has done what we've done in terms of bring beginners to, what is a pretty sort of challenging sport and space. But I think the genius in the syllabus is that it gives the coaches a model that if they follow that to the letter and follow the bouncing ball, that what they're going to get is sticky customers. And that's what we want. We want people to start. We want people to go to the end and finish if they choose to compete, which most of them do. We run those live events. But more importantly, then we want the customer to keep going with their learning journey. Now, maybe they decided, I liked boxing the best. Or maybe they decided, I like jiu-jitsu the best or whatever. That's another beauty of combat sports and martial arts is that you can really, you can focus on the areas you like the most. And so that's that lifelong learning journey. And that's where, if we talk in investment terms, that brings really sticky lifetime value of customer attributes.
To the gym owner.
To the gym owner, to the sector, right? Participants. I always say to my investors, if you want a real life story and lifetime value of customer, you look at Nick Langton, who's paid, over 30 grand of fees to our local jiu-jitsu academy while, my boys and variously I have trained there over the last decade. Well, to a small business owner, that's a lot of money from one family. So, and why is that? Because particularly in the case of my boys, they started a sport that they trained and loved and competed in for a lot of years, and they had a bunch of mates at the gym. And so that's that's what we love about this sector, that once you get customers over the hurdle, right? Once they realize what a great gym is and what a great coach is, they become really sticky. And, you know that from, all the training you've done with Larry, right? It's not necessarily the easiest place to walk into. It could look a bit daunting.
Definitely not.
You could walk in at the wrong time and see a sparring session and think, oh, shit. Yeah,
totally.
But once you're immersed in the gym community and culture there, you're not going to leave that and go back to a boot camp in the park.
Yeah, I get it. And so your thesis, Nick, is that it's much more complicated than this, but your thesis is that Train Alta provides a syllabus. It also provides assistance and or marketing content for the gym owner to recruit, 20 or 30 people, train them up for how long is it? Half a year?
It's 20 weeks.
20
so
weeks.
100 lessons for the primary program, which is our warrior training program.
Yeah. So
and then for them to be, stay members of Alta and keep training in their gym,
and paying fees.
Program. Yeah, correct.
Which they might not have had in the past. They might not have had any of these people in the past.
Yeah.
It gives the MMA person in the gym a program to follow, so it's consistent. It's a consistent program, so it's not changing every week.
Yep.
He doesn't have to make a decision what he's going to do tomorrow morning. It's all set out for him or her.
Yep.
And then they take these people through, and at the end of 20 weeks, you put on an event. Train Alta puts on an event where these individuals have a choice if they wanted to compete or not. And someone goes, there must be a matchmaker in there. Someone says, well, you can fight this person, you girl, boy, or whatever it is.
Yep.
And they invite their friends and family, and they all get up there and have a good time.
In front of a big sold out crowd. The last big one we had in Sydney, Randwick Racecourse, 1,000 people sitting at fine dining tables watching. It's the ultimate kind of white collar MMA. It's kind of the ultimate sort of bucket list, style experience. And so that's the Trojan horse. That's the piece of friction that creates excitement around how to get involved in the sector. But what at the central to our value proposition is we're saying to gyms, we're going to bring you new customers. We're going to help you with your marketing. We're going to bring payments infrastructure that makes you don't have to worry about collection.
So they don't have to collect the dough?
Correct. We do all of that.
And you pay back to the gym owner?
We keep our split. We pay to them.
And you do the marketing?
Correct. In conjunction with them. So we leverage our content. We ask them to record content. They publish stuff on their socials. We publish it on ours. We boost it where we need to. We build landing pages for them, all that kind of stuff to make sure we can capture and onboard the members, collect deposits and say, okay, day one of your program, here's a cohort of people who want to come in and train with you for 20 weeks. Look after them. Here's the syllabus. And what you find in the sector, and again, in martial arts and combat sports, sometimes it appears, some of the owners, coaches, whatever, they can kind of appear a little bit like rough diamonds. In reality, it is one of the most nurturing and caring sectors. And so we know when we partner with a gym, they're going to look after the people we put on their mats.
Now, to do all this, there's a big piece of technology sitting in the middle of it, which, to be honest with you, the gym owner doesn't really need to know about just as long as it works. But a big part of your business is technology.
Yep.
I mean, for me, I see your business as a tech business more than anything else.
We are.
You're a tech business, and therefore you need to raise more money. So just take me through the rounds that you've been through. I think I've been through 2 rounds. So there's a few rounds involved.
Yep.
So let's take our listeners through the process of how you, as an ex-investment banker guy, this area backwards,
Yep.
You have some interesting names who are investors as well.
Yep.
But take me through the rounds. How do you go through the rounds? And probably more importantly, then just stop before we get to the listing on the New York Stock Exchange, which is unbelievable.
Sure.
For an Australian entity to do that. Not
Yep.
too many Australians do that.
No, we're proud.
Yeah, you should be proud.
We are.
It's a big deal.
It is.
And it's an arduous course. I mean, my God, that's worse than fighting all the top UFC fighters one after the other. That's what I would do.
Felt like it.
I'm
felt
sure
that
it
hard.
did. So over a number of years.
Yeah.
But just take me through the early raises and then just stop before we get to the NYSE.
Yeah, sure. So, like all businesses that we scaled up, we wanted to obviously grow our revenues. We wanted to prove out our unit economics. We wanted to invest in growth. We also had, because we had the opportunity to sign big names in other regions, like John, like Eugene Behrman coming on, City Kickboxing.
From New Zealand.
Yeah, when we originally signed the guys at TriStar in Montreal, these were really big name gyms. And so, a pure, let's say a consultant or accountant is talking to us and saying, well, why are you now operating in multiple tax jurisdictions and why are you making multiple currencies? And this is just making everything too complex. And I agree. It certainly did when the business is subscale. But you have to take advantage of those opportunities when they arise, like those big names want to get involved. So you find a way. And so to that extent, then we were like, okay, we need to fund the growth. We've got some big names on board. I did an initial round in, let's call it in 2018, where I'd obviously invested a lot of my money and also for the first several years, worked without taking any money out of the business, which you have to do as a founder. You can't ask for investment money and then start saying, well, I'm going to take a commercial salary.
Investors won't give it to you.
It's bullshit.
But they won't give it to you.
Nor should they.
No.
Nor should they. No. So from our perspective, I raised the first year, so 2017 was critical in that I needed to see that there was enough spark that we were going to get somewhere. So I kind of funded the business for the first 12 months completely. And then it was like, if I'm going to take money, I want to take it from trusted people in my circle who are sophisticated investors, who can cut six-figure checks, who know exactly what they're getting themselves into. They know the risks of investing in startups, and private companies. And once I took that first check, from a mate who, again, really sophisticated investor, and I'm not worried that if he lost that money, he'd be on the bones of his ass or anything. But at the same time, it was almost worse than having my own money in. And I think that was when I realized that, okay, like we go until we either make it or it falls apart, and I've done everything within my power. Because, I once heard somebody said that raising capital is just creating obligations. And from my perspective, I felt those obligations, but I felt the benefit of them was that on the really tough days, I could look at the people who'd invested in me and believed in what I thought I could do, and pushed forward. So that was kind of easy. We went through that phase. I was able to probably raise some bigger checks than, if I look back on it now, I'm like, how the hell did I do that? But I had a core group of people who believed in me. So let's say that was kind of 12 investors who all cut six-figure checks. And then the next step after that was in 2019. We were like, well, we've got a following and people know about us and all that. Could we leverage that for some money through crowd equity? And so we actually raised some money through a platform called Birchall. I'd say that I originated the overwhelming majority of the money, but what it did was a couple of things. It enabled us to take on more investors than you typically can as a PTY limited.
Yeah, so smaller checks.
Yeah, so it gives you, it sort of gave us a framework to be able to do that. So we picked up, some money there and got, obviously a bigger retail investor following. And then you go through phases like that would literally happened in, mid to late 2019. And the business then, we'd done 4 years in a row of doubling our revenue. So triple digit revenue growth year on year for 4 years in a row. And we were absolutely flying coming into March of 2020. And then we know what happened. And the
gyms
world
closed
stopped
down.
and gyms closed. And that was when we did realize the utility of being a payments hub. So we had all this money that people had prepaid for training, and no one knew back then how long are we going to be stopped? What they say, what was that bullshit, 2 weeks to flatten the curve? They're still telling us that shit 2 years later. So, and I say that with a bit of passion because I spoke to so many small business owners during that period, and I think a lot of people don't understand how hard that period was for small business. Some flourished, but a lot of them did
especially
it really
people-facing businesses.
Yep, did it really tough. So that happened, and then there was a case of, okay, we'd shown a lot of traction. We'd got our annual revenues to 7 figures. We'd shown really good growth. The sector's booming. Now COVID's happened. And so then it was a case of going, okay, we need to stabilize. We need to work out a pathway through. I'm going to have to do a recap, later in in 2020. Thankfully, I was able to then do a round, which I'd kind of call my Series A. I get a bit caught up, I'm not as au fait with all the nomenclature as the young kids who know startups these days. But that was what we'd kind of call our Series A, which was the end of 2020, early 2021. So we then kept building the business, investing in our tech, really building scale so that, as soon as we could prove out the next phase of growth, then we could go for the big check. So the Series A, which we raised about $6 million Aussie or something like that. And then that was early 2021. And then, we remember by mid 2021, then Australia got shut down again for another, sort of 6 months in terms of businesses, gyms, what have you. And then, we went through a process of iterating, growing, continuing to grow our footprint, prove out our thesis, build out our unit economics. I think an advantage we had, Mark, as a startup, we were always selling something early. We never came from that startup ethos of give something away for free, amass a huge amount of users and then work out monetization. We started at the other end. We were charging for a premium product that we were licensing to gyms and putting in the gyms.
But they needed it.
They needed it. And I think a real advantage to us, at least we could always sit down with investors and show them an income statement that had millions of dollars of revenue. Now, did we have losses? Absolutely, as we invested in our tech to grow. But at least investors could always see, okay, there's real unit economics here. There's real customers paying good amounts of money for this. The gyms love it. Okay, we get.
So you proved the concept.
We did, well and truly, and proved it in multiple markets.
Multiple
proved it in North America, proved it in UK, Ireland, proved it in Australia, New Zealand. So, over thousands and thousands of customers. So you go, okay, so this works. Now we want to get the capital to really scale it. And that's when we ran into the middle of 2022 and private markets just froze. I remember being actually away. It was the June long weekend in 2022. We'd shaken hands with a couple of investors who were going to basically close our round for us. These were material checks, I think totaling about $5 to $6 million. I was out at Orange for a state rugby championships with my youngest. I'm out there going, I've just closed my round, so excited about the next phase of growth. The markets absolutely capitulated overnight on the Monday in the US, and within 2 days, those two investors pulled their investment. They got they got margin calls from prime brokers, whatever the case may be, and we suddenly went, oh shit, we're really stuck here. And like every startup that's scaled their way to this, they've all gone through it, right? It's not unique to us. It feels really unique and personal at the time, but you have to battle on, and we did. We scraped and scratched, and all our key staff got in behind us and helped us with our cash burn, and just could not have been more supportive because we were just so close. And then thankfully we found our partnership with some guys down in Melbourne from a group called Reach Markets, who are actually fantastic. They raised a round for us at the end of 2022, and 2022 was brutal for raising money into private companies. So kudos to the guys at Reach Markets. And that was literally the bit of money we needed to get to the next phase. And then we got introduced to our US investment bank, which is the start of the listing story.
So originally you were going to, as I recall, you were going to list on the NASDAQ?
Yeah, I think
at one stage anyway.
Yeah, it was notionally we're going to list in the US. Obviously, we're a microcap company, so we're going to list in the US. Technology companies are immediately associated with the NASDAQ. But then, we were talking to our bankers and our lawyers, and they said, the NYSE is really worth a look too. And so you kind of go through this process where you go and meet both of them, you take advice from your bankers, and you kind of work out which is the best fit for you. Obviously, they're both incredible exchanges. And I suppose as well, part of the fact that, the NYSE, with all its history, it felt pretty special to sort of go there and meet those people. And then also knowing that that's where ultimately the UFC is a listed company through TKO on the NYSE. So there's just a whole range of reasons that ended up being them, and which was great.
So just take me through this part. You mentioned very quickly then your advisors, lawyers and bankers.
Yep.
How does you go about putting a team like that together to get set up on the NYSE, the New York Stock Exchange? Did you look up did you Google who to go to? I mean, what's your process? I mean, how did you find the bankers and the advisors?
That all starts with having great investors here in Australia.
So you got knockdowns. Someone said, go and see this person. Is that what happened?
We got introed in, and actually we got introed in, and then my chairman, Vaughan Taylor, who you know Vaughan well, Vaughan then was on a trip for a company that he sits on the board of. He had the first chat with the bankers, a group in the US called Think Equity, fantastic guys to work with. They were really interested in getting to know us a bit more. I jumped on a bunch of phone calls with them, and they're like, they saw it straight away. Like
they saw the rising tide.
They saw the thesis. They saw this incredible growth in combat sports. They saw the rampant success of the UFC, and they saw an opportunity to aggregate the sector at scale from a small company. So from us, listing is about I joked, to my wife after we listed, I said it took me 7 years to get to the starting line. Like, this isn't a capital event for us. This is the start of what our real growth story will be, which is enormously exciting. But we were so lucky, Mark, that I've had great investors here in Australia who were always looking to, and you've done it for me too, like give me advice, make intros. And as a founder, you have to lean on your investors.
Unashamedly too.
Absolutely.
Yeah.
Mate, if you're working your ass off, they know you're doing the absolute best to protect their capital. And good investors, of which I've got a lot, have really opened a ton of doors. But you, as a founder, you have to stay active. They're all ridiculously busy people. You're a particular example of that. But if you text them enough, if you say, hey, I'll come and see you, can I buy you coffee? Have you got 15 minutes? It is a contact sport. You have to stay busy.
And normally they'll say yes.
They will say yes.
Normally they'll say yes.
Yeah. So that was how we got introduced in. And then, as I say, we started working with bankers who were kind of trusted and known to people within our close circle. And then they introduced us to some great, securities lawyers who have been awesome to work with and get to know over the last 12 months. And, and then we had our own team, our own staff here who, had to work so incredibly hard to get through all the filings and all the iterations of the filings. And I mean, I'm the talking head who goes out and sells the vision, which I do passionately because I bloody love it. And I'm super excited about where we're taking this company to. But what's not lost on me is there's an incredible team behind me who are doing a lot of the far less glamorous work, right, to get to listing. And so you do 9 months of work to uplift all your financials, go through ridiculous levels of audit, all the stuff that you have to.
What otherwise called due diligence.
Yep.
And your advisors have to do or help you participate in the due diligence alongside you, because they're sort of putting their name to it a little bit.
Yeah.
Because they're putting it out to other people to invest in the business.
Correct.
So could you maybe just give us a sense of how long did it take you to get this process up?
Yep.
Did you have to actually, and importantly, a lot of people don't know this, but you have to spend a lot of time in the US.
Yes.
It's not, and it sort of means you're away from your family. You got two sons at school.
Yep.
They're still at school, aren't they?
Yeah, 3 boys at school.
3 boys at school,
Yep.
right. And I know you're very close to them, and obviously your wife is here as well.
Yep.
And you ordinarily are pretty involved in what they do. They're footy players and league and all that stuff. That's a big sacrifice. I mean, I think that part needs to be, we need to talk about that. Like that commitment to spend a lot of time overseas, talking shop.
Yep.
And then who runs the Australian deal? Like who's actually doing BAU, the business as usual?
Yeah, I mean, I got a great leadership team who they run it independent of me. I mean, I sit on our most mornings. I sit on our morning whip where our exec team talks about our absolute priorities for the day, the week, whatever. From a management style basis, I've always been like find great people, make sure they understand the goals in a really explicit way, but then how they go about executing that. If you found the right talent, that they will find their way. They can come back to you if they want clarity or they want to understand something. So they do run the business, right? Like my job obviously has been, corporatizing the company, raising capital, finding great talent. I've got a very passionate view on the investment thesis of the company, and I do get involved in, decisions around strategy, even short-term tactics, whatever the case may be. But it is the team in the office who's running the business day to day.
And you're how do you go about saying to your family, listen, I've got to spend a lot of time over the next 9 months in the US. I mean, what's that process look like before you list?
You say, do you like living in this house? Do you like going to the school you go to? No, it's one of those things that because I've been doing the startup thing since the beginning of or end of 2016 and beginning of 2017. So my twin sons are about to turn 18. My youngest is about to turn 16. They only have really vague memories of when Dad used to put on a suit and go to work 5 days a week in the CBD. Their enduring memories of me is a startup founder, hunched over a laptop at the kitchen table, probably more stressed than he wants to appear, all those things. So
it's an evolution. So they watch you evolve into this person.
Yeah.
And it's nearly like, oh, well, that's the next step. Dad's got to go. And we expect, that's what we sort of expect.
Yeah, very much. Like I would say it was massive excitement from the whole family that, okay, you got to be away a lot, but you're pursuing something, a pretty ambitious goal, a big dream. Can we get there? And to your earlier question, Mark, like I think we did it about as quick as you can do it. From the moment we signed the mandate agreement with our investment bank to the day we listed, I think it was like just under, maybe a couple of days under 11 months. So call it 11 months, bit less. And because at the start, I think when we signed the mandate letter and we were like, okay, so how quick can this be done? And they said, well, we've seen it done in 6 months, but that's a push. I can honestly say now, I could not imagine we could have got it done any faster. And that is testament to our professional services firms we work with, but most importantly, the staff, my staff who help drive that process. So
how important in the process of talking to your investment bankers, particularly before you get the mandate, but how important is it to sort of, throw in those sexy things like, Daniel Cormier.
Yep.
Conor McGregor, dare I mention his name on this podcast. Yep. Obviously, we talked about Eugene earlier on, and John Kavanagh as well.
Yeah.
How important is it to throw those things around? Just a little bit of spice into the fire,
Look, it is important. I mean, if you're working with the biggest names in the sport, if the biggest name in the history of the sport, Conor, is a early stage investor in your business, yeah, of course, that's validation and cachet.
But what does it do? It is validation, but like let's not assume that he's a great business person, although he's a good business person. But let's assume he's just like any other fighter who's got some money. Is it that sizzle part? I mean, we always talk about sizzle and steak, but that sizzle, that is important.
Yeah.
So I think if you're running one of these programs, it doesn't matter where it is, but having some cred, or people of cred, gives you cred, or gives the concept, the thesis cred.
Yeah, of course. So what does it do for the bankers? Well, it validates that when you say you're partnered with the biggest names in the sport, that is real. Right? When you say you run your programs with the best gyms in the world, that is real. When you say you've demonstrated these unit economics over thousands of participants over a lot of years, and then it comes out in the financial statements, that is real, right? So that's the kind of the DD they do at the start to go, okay, this is a listable business because all these elements are, are real. And of course, then when bankers are thinking about how do I get cut through with a story, right? With a story about a growth company that's going to be a microcap that we feel investors will understand the thesis, and then they want to get behind it. So I often say the investment thesis of the company is convert 640 million fans to participants. But I think another way to think about us, particularly now that we're in trading in public markets, is I want to convert 640 million fans of MMA into people who want to own a share in the growth of this sector. Well, that's a compelling proposition. So if you want to get the attention of retail investors, let's use Conor for an example. Alta is the only company that a retail investor can invest alongside Conor in. His other companies are all private. Proper 12, that Forged Irish Stout, his apparel companies, McGregor Fast, all those things, they're all privately held. This is the deal, whereas you go, okay, if we accept the fact that everything that guy touches turns to gold, which it does, then if you want to invest alongside him, well, come and invest in Alta. If you believe in the growth of MMA over the next decade, come and invest in Alta. So from a banker's standpoint, that's a compelling story to take to market so investors, get cut through and, hey, I get that. That's a story I could get on board and follow. I think that's one of the real advantages. And then people say to us like, oh, you've gone public so early. Going public is really expensive. It's very onerous for companies of your size. All this is true. I'm not disputing any of that. My answers to that is there's also more. If you can get public, there are better pools of capital available in public markets. There are far deeper pools
especially
of
in
capital.
the US.
Especially in the US. And investors have been favouring liquidity for the last few years, right?
What you mean by that, though, is investors would rather invest into a listed entity where they could buy and sell at whatever the price is,
yep,
as opposed to investing in a private entity where they're sort of stuck a little bit.
Yeah, your capital's locked up,
yep,
right? And so for us, that was one of the big drivers, having a great investment bank who've got a track record of scaling companies from our size to significantly larger, them wanting to take us public, that was another big reason. And then probably the other reason is that I think when you're a company like ours that has so many big names involved and has a great global footprint and works with all these, these star gyms, coaches and athletes, you do have a story that resonates and cuts through for retail investors. So you could argue that you're going to realize a lot more value in your company, your brand, your notoriety when retail investors can invest in you and they can buy shares in your company on public markets than if it was closed and it was private and it was minimum check size of 50 grand and you've got to satisfy all sorts of wholesale investor provisions to be able to get access. So that's another reason why it made a lot of sense for us to go public at the stage we did.
And in terms of your marketing, and I don't mean marketing to retail investors as such, but marketing it to the investment bankers who are going to support it so that it can go to retail investors.
Yeah.
How important is it to pepper, or maybe a better word is to balance your front of house with female talent? And I don't mean that in terms of technical talent. Yes, technical talent, I do mean that, but I'm talking about at the front end, right? You got Conor McGregor, you got Daniel Cormier, but like, what about at the front? I mean, who did you go out after?
Yeah.
And how's that process work? How do you find these individuals, if you did find an individual, a female, to balance up the outlook? Yeah,
well, I mean, 3 years ago we bought Laura Sanko into the business as one of our first big US brand ambassadors. Laura commentates on the UFC. In fact, she commentated on the UFC that you and I were together at in Sydney, one of the big pay-per-views. She's the first woman to have commented on a UFC pay-per-view in like well over 25 years or something like that. She's one of the UFC's top broadcasters, analysts. She's a former pro fighter. She's in her 40s. She's a mum.
How do you approach someone like that? I mean, how did you get her to come on board, so to speak, on the story?
Yeah, I mean, look, through our networks, right? So, classic example, one of our long-term PR guys in LA, Zach Rosenfield, who's become a great mate over the years. Zach also happens to manage Nate Diaz.
Legend.
Yeah, and we've been so heavily tied into the sector at an elite level for a long time because we generated a lot of credibility through how we monetize gyms, and so we're a sector insider, Mark. Like that's, and so how did we get to Laura? Zach knew Laura's agent. He picked up the phone, says, "Hey, there's this company. They do really great things. They really want to, focus on getting more and more women involved in training martial arts and combat sports." Her star was really on the rise, 3 years ago, and we sat down and Zach, Laura, and I had a conversation, and then she told us, a remarkable story about how her training journey begins. She never intended to be a fighter. She went to start training in a gym at a time she'd come out of a bad breakup. She was lonely. She just wasn't feeling herself, and she kind of just started training martial arts and somehow fell forward into ultimately being convinced to have an amateur fight that went on to multiple amateur fights and ultimately some professional fights. So she said to me on our first conversation, "Nick, Alta's story is my story. Like this resonates with me." And I mean, we've been working with her ever since.
So the big deal in all this stuff too, by the way, is all that stuff is good. Everyone's interested. Everybody wants to support it. Of course, the valuation part's the big story. How do you arrive at a valuation for Alta when you have to project forward what you want to project forward what your valuation is going to be? And the job of the bankers a lot of times is to sort of arm wrestle you and get your price down or your value down or more respectable, more acceptable, whatever the word is. How do you go about that? How do you go about it?
Yeah, so that's a process you go through. I think ours was anchored in fundamentals, right? So if you look at two primary things that drives what we believe the valuation to be and why, we looked, number one, some long-term unit economics of producing millions of dollars of revenue and paying millions of dollars to gym owners around the world. So we had core unit economics that said if we run Alta programs in this number of gyms, this is gross revenue on a per gym basis. These are our margins on the customers that we bring on board. So we had we had deep unit economics that said, okay, as a banker, they go, okay, I get that. That's not, you've done it in one or two locations. You've proven it broadly. So if we give you the fuel to grow, how quickly can you grow it? And then the other dimension in that is, well, what is your footprint? How many gyms have you got signed agreements with that they're ready to run your programs and take customers from you? And so then you get these kind of average unit economics with your gym footprint, and you get to us having a embedded revenue opportunity of, $50-60 million, whatever the case may be. So then you go, okay, if we don't sign another gym and we just execute on our plan, then there is a revenue opportunity, of up to $50-60 million without growing your gym footprint anymore. Now, of course, we're going to continue to grow and do all these other things. So valuation was ultimately derivative of what is the opportunity as it exists today, and what proven unit economics have you guys displayed? And that ultimately, then you factor in some other factors, maybe capital raised to date, valuation of previous rounds, that sort of all went up gently. We raised, the IPO was done at circa $50 million valuation for the company. The last time we raised money before that, the company was valued in the high 30s, early 40s. So it was kind of just that kind of natural graduation as we proved out what we were doing.
But you've got to keep fighting every step of the way.
Yep.
You don't stop.
No.
And what is your ticker?
It's the best ticker.
What is it?
MMA.
MMA. How the hell did you get MMA?
Well, that's kudos to one of our bankers in New York. We were talking about, stock symbols, and I kind of naturally was, okay, so can we get Alta, or what could we? I kind of just immediately went to something that was derivative of, and he said, what about if we went for the sport, MMA? And I'm like, well, I mean, surely that's been taken. He goes, well, it's worth a look. And so we went straight to our lawyers and then applied through the relevant channels, and it came back clear. No, that's free. And then that was like the quickest response ever to an email. Like,
nail it straight away.
Take it now. And I will say a lot of investors, and I was on investor calls early this morning in the US, like everyone says, my God, like that stock ticker, that's just a killer. And again, when you think about us wanting to engage fans of MMA who love the way the sector's growing, right? That's a pretty easy way stock ticker to remember.
Just look up
if
MMA.
You want to get exposure. So kudos to our bankers there.
And with the capital that you raised, what did you tell your bankers, et cetera, what the purpose of the money's for? I mean, part of growth, I get it.
Yeah.
But like acquisitions, and have you done anything about that?
Yeah, so use of funds was specifically around, obviously investment in marketing and growth to fund revenue growth, activating
in the business,
our gym footprint, that making a handful of key hires. Obviously, people who work in startups are special people. If you can stay working in a startup for a long time, you've got tremendous resilience. And so, hiring a few extra people in to help out the team, which is great. And then we've looked at acquisitions on a strategic basis. So if it makes sense, i.e., can it accelerate revenue growth, right? So are we acquiring an asset that might have a whole bunch of users? It could be an adjacent business that is really easy to kind of monetize that user base into our world. That would be a reason we would look at an acquisition. Or the other one is, could the acquisition provide a bunch of utility that we can deploy to fast track our technology platform? So we made an acquisition that we announced last week, a business called Hype, which is this incredible mobile marketing platform, sort of CRM, website builder, payments, but all built mobile centric by some really, really smart guys in the US. And we started talking to them because we wanted to become a customer and get exclusivity in our sector around what they did. But before we went to build, expensive, integrations and what have you to embed it, we got into deeper conversations, and we got to a position where it actually made a lot of sense for them and us that we could acquire them. And that's fast tracking our tech roadmap by minimum 20 months, probably 24 months. It's going to save us a fortune in tech CapEx, and we've picked up like a world-class engineering team. So it's just win-win-win.
And Nick, how important, when you're listed, you've got a lot of currency. So how important is it in acquisitions, for example, being able to use your own currency, that is your stock, issuing stock, or part stock, part cash, or it can be all cash, of course, or all stock. How important is that flexibility from being listed on the NYSE?
Yeah, it's huge when the consideration for an acquisition can be your own stock. Cash is obviously precious at all times. And so we were fortunate, Mark. We made some acquisitions late last year that were script based only. So just using our stock, no cash consideration, and made those acquisitions. Obviously the people who sold had the hope that we would be successful in going public, which we were. Being able to issue our own equity as consideration for those when it's a really highly aligned acquisition, it's enormously valuable.
So how final question for you, mate. Have you had a holiday since you started this journey in 2014 or whatever it was? And are you as excited today, or are you more relieved as to, are you as excited today as you were, in the beginning of the journey?
Yeah.
Or are you more relieved? Which one?
It's gone through far. I'm now, as I sit here now, I am more excited than I've ever been. I did have a holiday. I did refresh. I took sort of 12 days off. I still thought about the business and what have you. But I said at the start, Mark, like for me, it feels like it took me 7 years to get to the starting line, and this is just the beginning of what we're going to build in this, incredible sports vertical. And so I feel more excited about where we're going. I I do feel really relieved that we got there, and it was a really tough journey. But now, like the rest of the team, we've finally got the resources we need. We're operating in a really big market again. The pools of capital in the US it's just so much deeper. The sport has grown and evolved and is just so much more advanced there. So it really feels we've got the jetpack on now, and that really makes it easy to get out of bed in the morning.
Nick Langton, CEO of, is it still called Train Alta, or is it just Alta now?
Well, it's Alta Global Group, but the funniest thing is that all our social handles are Train Alta.
Yeah, I see that.
So everyone just calls us Train Alta. So,
I just want to say congratulations and well done. I've made some investments, some things haven't done so well, but this one, I haven't even looked at the share price, but just the fact that you got listed on the NYSE, and I was a small part of that, I feel so happy. It makes me really happy, and it makes me even happier to be able to talk to you many, many years later on going public about the process of raising money, and mate, you raise it at the ultimate place, the New York Stock Exchange.
Yes.
Congratulations, mate.
Thank you, Mark.